Gold and silver are continuing to trail lower today as we speak. We're speaking on Thursday with Peter Hugg, Global Trading Director of Kitco Metals. So, Peter, the metals are down. S&P 500 is, flat to down. The stock markets aren't doing great today. Let's put it that way. So there's a lot of just selling everywhere. What's going on today, you think?
Well, I mean, the equity market's down, the Dow's down 80 points. You got the NASDAQ up 60. So I don't consider the markets on the equity side to be, they're down. I mean, from are they in the red or in the black? Yeah, they're in the red. But again, nothing major happening. Kind of flat on the equity side. On the metals, gold again held the critical 1850 level on the DEES, which is basically the cash market right now. Concerns me that this is the third time it's tested. It's bounced, so we're still constructive from a technical perspective. If it does test 1850 again, though, I think fourth time is usually a charm, and it'll break down through it. And I think it's all again the result of a divided government. An unknown, a very high probability that we won't get a stimulus package, which is what both the metals and the equity market are still looking for, to create a bridge until the vaccine takes effect, until at least the new administration comes in. So right now we're sort of in no man's land, and there are a lot of investors that have got profits on the table from this March run, and they're starting to get a little antsy and a little bored, and taking some money off the table because they're not seeing this pop to new highs. So I think that's what you're seeing in the market, some churning, some back and forth in a very tight range on gold. Gold 1850 to sort of the 1925 range has been our range for pretty much the past 3 weeks, other than a little bit of a breakout before the election. And when the markets consolidate like this, and interest starts to dry up, people sometimes get a little bit nervous and tend to liquidate positions.
Peter, why does gold need fiscal stimulus, though? Because it's a monetary metal. What it needs really is expanded money supply, which comes from monetary stimulus, not really fiscal stimulus. In fact, fiscal stimulus is just going to make people more risk on, isn't it?
Well, I think the fiscal stimulus argument here is that if you throw another 2 trillion or 3 trillion into the economy, and the Fed is going to remain accommodative until at least through 2021, that the argument is that the demand, as the demand side of the equation starts to increase, especially if we get a vaccine and the economy gets back to somewhat normal look in 2021, that this demand is going to create inflation. Inflation is going to be negative for the dollar, and that's going to be positive for the metals. So that's the argument. The Democrats want to throw a big number out there. Again, if they don't have the Senate, if they don't win those 2 seats in Georgia in January, it's questionable whether they'll have the firepower to put a $2 or $3 trillion number on the table. So there's just a lot of unknowns. But again, the argument being you add 2 trillion more on a fiscal basis, and you've got the Fed accommodative. There are analysts out there that are expecting inflation to start getting ahead of itself in 2021, which is generally a positive for the metals.
Now, last week we spoke. We very briefly touched on silver towards the end of the interview, and I didn't forget. It was at the end, but I still remember what you said. So I'm going to bring it up this time and bring it to the forefront of today's interview. You had said that fundamentals are still bullish long term for silver and gold. In particular, silver. You think that it's possible we might see prices in the 40s by next year. What are the circumstances we'll need in the economy to get us there?
Well, I think there's 2 elements. One, again, if we got the inflation scenario and gold took off, silver being an industrial metal, with the economies again rebuilding and regenerating, that you'll get an industrial component of demand coming into the silver market, and push silver from a ratio perspective higher than gold, where the ratio is currently sitting. Again, the caveat was being I'm bullish gold. I think gold will take out 2,000 and see new highs in 2021, probably first quarter 2021. And in that context, silver has been extremely resilient here at 24-ish, in the $24-ish range. And given the fact that gold's come back down, to 1850 twice, every time silver gets south of $24, there seems to be buying interest. So if silver can hold this 24, 25 range, and then gold gains some momentum and gets back up over $2,000, I think a $35, $40 number on silver first quarter next year is totally within the realm of possibility.
Going back a little bit about the fundamentals of silver, let's talk about the supply side. If, in fact, silver and gold prices do climb higher next year, wouldn't that incentivize miners to produce more and thus bring up the supply, which would weigh down on silver prices? Could that be a possibility?
It's the same logic with gold. I mean, yes, that is a possibility, but it's a timing window. So you get major demand in silver. So now the mines say, okay, let's produce more silver if they're capable. I mean, again, just ramping up production in a silver mine isn't necessarily that easy. Getting a new mine up and running is almost impossible under today's circumstances, just by the time it takes to get the financing in and get production started. So there's going to be a lag. And you're going to have silver supplies not meeting demand until that demand is met with new supplies. But that could take another year to 2 years before those supplies catch up. And it's in that time window when you have that squeeze that you get the significant run up in a commodity that is also industrial based, such as silver, and even a metal like platinum, palladium, and rhodium. I mean, rhodium is today north of $15,000 on the interbank basis, and palladium is holding its level at the 2,300 level, but platinum is breaking away from gold. I mean, it's moved up about $50 just over the past 2 trading sessions, as gold has actually come down about $30. So there is some evidence that there is going to be a platinum shortage in 2021. So we're starting to see some of the larger players acquiring platinum at these prices.
Speaking of supply and demand, Peter, what are you seeing in the physical coin space? Are we seeing a deficit, surplus in demand, supply? What's happening?
From an investment bar and coin perspective, there is ample silver now on the market. Premiums are down and reflect that supply. Getting your hands on silver eagles, silver maple leafs. Silver maple leafs a little tighter than silver eagles. The RCM is still on allocation on the silver maple leafs, but 10-ounce silver bars, 100-ounce silver bars, any type of silver rounds made by private mints, generally in good supply. I mean, if a client wanted to buy 50,000 silver eagles now from a dealer, it'd be no issue at all. Probably at a premium in the neighborhood of about 3.25 over spot, which puts it almost right back in line with where the premiums were pre-COVID on silver eagles. So there's good supply on silver physical product. But when I say good supply, you might be sitting on, a dealer, depending on the size of the dealer, might be sitting on, 100 to 300,000 ounces of physical silver in various forms. But again, you get a run up on silver and it breaks up and people start to jump back into this market from a retail investor perspective. The supplies are relatively insignificant if we were to face another sort of March, April type of demand scenario.
Yeah, it's interesting that the March-April demand scenario is not really playing out right now. We're seeing, record cases of COVID around the world, not just the United States. Europe is back in lockdown. London, which is a major financial hub and a mover and, a hub for storing bullion, that's in lockdown as well. But yeah, we're not seeing logistical issues like in March. Why is that?
Because I think the local markets have good current supplies. Getting airplanes going over to the Far East has become easier. I wouldn't say it's pre-COVID. Might take me now 3 to 4 days to find cargo space on a plane to move product over to Hong Kong. Whereas, March, April, it was 2 to 4 weeks out to find cargo space on a plane. I think what you're seeing is that investor demand on the physical side of the market has dropped considerably during the last 3 or 4 weeks. And I think investors are either looking for a drop in this market so they can acquire more at lower prices, or they're looking for a break on the upside to feel that they're justified in buying more silver at current levels. So, and with current supply of physical product readily available, again, in normal quantities, up to 300,000-400,000 ounces from a retail dealer is normally accessible. Until we get a change there, you're just not going to see the same type of action from a move up until we get either more stimulus or there's another triggering event that could cause the metals to break to the upside.
Okay, well, thanks a lot, Peter. That was great.
You're welcome.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more.